Good morning, good morning. You know what I'm saying? Today is Thursday, August 20th. So let's get into what happened today. Um, I want to start with Opgn. Um, so to start off today, um, executed 3 trades again within the first half hour of the market open. That is something I definitely need to work on. Most definitely need to work on because I'm giving up the back end opportunities. So today, um, I deviated from the plan with one particular stock. Because I was noticing a squeeze. But let's just dive into it, man. So here's my thought process. Opgn. Opgn. First thing I traded today. All right, Opgn. As you can see, Opgn. This was a few days ago. This is a 10-day, 30-minute chart. So this is about 9 days ago. But as you can see, pops, comes back, pops, right? Okay, so today, this is what I'm seeing pre-market. Okay, let's get in the minute chart. So pre-market's looking strong. Now, lately, I have been noticing when it's strong in the pre-market, it usually does tank in the morning. As you can see, as it sure well did. But as I'm watching this pre-market, as you can see, this candle right here, this is such a strong candle breaking over the highs. So when I seen this candle breaking over the highs, as strong as that candle looked, that really intrigued me. As I've said before, when you see a green candle starting from the bottom and it closes near the top, it's usually a sign of a bullish candle. So when it broke here, I wanted to get in. So at 6:20 before the market opened. So I've been telling myself that when I typically buy the break, the original break, like it did over here, okay? When I typically buy the usual break, it usually drops, okay? Now, the majority of the time, 75, 80% of the time, according to data, and the data I've collected on these particular patterns, they usually tend to drop more than 6%, at least half the time. But they usually drop, period. And when I say drop, I mean once you buy, you're going to be down X amount of percentage. So, -1, -2, -3, -4, -5, and so on and so on and so on. So, I mean, it's a 75 to 80% chance that it's actually going to drop. So, lately, I've been catching big drops. Yesterday was like the outlier day on BDR where, it just ripped through, never pulled back, never was negative, and just ripped through. And I just completely messed up my executions as far as exiting for a profit. I've been getting really good at cutting my losses and focusing on that -6 area right in there. But I need to start getting better at executing my exits when it comes to profitability. So today, that was on my mind, okay, since yesterday. I still wanted to play -6, just like I said in yesterday's video. Focus on each individual trade for -6 plus 13. So that was instilled in my mind because that is the process. And as I've said, in the long run, the process is going to work in the long run. I could have multiple days in a row of losing. I could have multiple trades in a row of losing. I could have multiple trades in a row of winning. But it's that variable of plus 13 minus 6. And so today, on this particular trade, I entered at 620. with an entry of 368, which the breakout's at 367, and I entered in this candle. So as I stated, so when it broke here, I wanted to wait until it broke again. So I let it pull back, and then when it broke here, I got it into this candle. Now mind you that as I'm watching this, as you can see, this is a nice trend climb down, nice trend climb down, broke it over, and then it did dip below this last support area, which is right here. As you can see, it dipped below the red line and then took off again. Then it pulls back, and then we have a really strong candle. So to me, that told me, okay, if this could get at 620, we have 10 minutes to the market open. So it broke at 615, and I bought at 620. I was thinking with this candle, we could have a strong open, maybe up to the 390s, the 4s, and I could sell at the market open. But as I'm noticing this right here, it breaks down below this support level, and then it's just chopping around in here. So as you can see, right at the market, because I was going to wait for the market open, but as I'm noticing this, this looks like it's now turning. So you could kind of see like an arc, okay? And if it didn't finish high, if it didn't finish, you know, like I was hoping it would, just based off the chart and based off this candle right here, that I had already had a feeling that, man, this is gonna turn on me. So I waited to the final minute, 6:29 and 48 seconds, before I sold before the bell opened. So I was minus 4.6%. And sure enough, like I said, the opening is black, pre-market is gray. So I sold it in this candle right here. Yeah, I sold it at this candle at 351, and took my minus 4.6%, and the market dropped, just like I had the feeling it was going to. Again, for me personally, so I'm always up, right? Like I got in a habit of waking up 5 o'clock, 6 o'clock in the morning and watching these things. The personal habit that I need to break is when I'm watching, I have this just urge to trade, okay? So I have the urge to go. So again, I executed 3 trades in the first 30 minutes of the market open. I'm not even allowing myself to even participate in the later hours of the market, which according to the data, I have a lot cleaner trends, less choppiness. Things typically run a lot cleaner. Like I said, man, they usually run, as you can see, like in this, clean run, clean run, clean run, instead of it being up, down, up, down, up, down. And just like you see, up, and now it just completely faded down. And as you can see, dropped all the way down. So this was a break of pre-market high. Typically I like to buy the break of pre-market high once the market opens. So, but I have had success with buying pre-market highs before the market opens. But it's just something I need to take into consideration. Yesterday I told myself, you know what, let's just wait 30 minutes till after the market opens and then start looking to execute trades. I told myself that yesterday, even as I woke up, I told myself, give me some time. But as I said, man, I'm so used to being up and watching the market. You know, I'm up, it's 5:40 a.m. and I'm already wide awake. So, you know, I get up, go brush my teeth, you know, get ready for the day, get a little stretching in, down some water. And, you know, I'm in front of my screen by 6:15 and it's still pre-market. So I get into the habit of just automatically executing trades when I start seeing trends break instead of allowing the trend to form intraday at the market open, and give myself at least a good half hour to an hour to watch it play out for the intraday open market, for regular market hours. I think that's something I definitely need to work on. So overall here, the break in this strong candle is what gave me something convincing to buy this OPGN. So let's go over here real quick. Okay, OPGN. So I gotta give you my full-on thought process on what goes into this. So OPGN, as you can see, there are recent runners. So you see a gap here, squeezes up, drops down here, gaps up, squeezes up. So that's very similar to here. So you see this run in this area, boom, comes down, gaps up, completely blows it. Very similar here. See this run, pulls back, gaps up. I was somewhat anticipating it doing like what this candle did. Opens here, squeezes high, comes back down. It still very well can, because as you see, the candle open here, small wick here, and then the run. So I mean, it still very well can. But so you always want to look at the history of a chart. So this was back in March and April, where it had something similar looking to what's going on now. Market cap is 37.8 million, which fits my criteria. Flow is 15.07 million, which again fits my criteria. I like flow under 20 million, and I like my market cap under 50 million. So those two met my criteria. The history of the chart shows that once it gaps off a recent run and drop, it can run again. So that's, that made me, okay, OPGN. And also OPGN was also the leading percent gainer pre-market. So another reason why, this stock met my criteria. And then also it had a clean trend. As you can see, it keeps getting tighter and tighter. And it had a clean trend until it broke the trend in the area I sold. Not only that, but so I'm just showing you everything how it meets my criteria. So as you can see, volume right here. So for this candle, in this 30 minutes, it traded 3.8 million shares. Over here, 5.6, 3.8 plus 5, so that's over 9 million. Now we're talking 15 million. So, and then this is where I got it in this candle. So we're talking over 20 million shares being traded on a 15 million float. So it's already trading more than the float. So the float already rotated once. Okay. So typically I would like to see the float rotate at least 3 times. Because like I said, through data, it is shown if the float rotates 3 times, I have a better chance of success. So, and as I'm looking at this now, if I'd have had patience, this is looking like a great morning spike reversal, breaking back into the 3s if it could keep climbing. But so as far as executing the breakout and my entry point at the breakout, I am kind of battled back and forth right now because I do actually like the breakout. I do like the candle that broke it, very strong. It was trading over the float at the time of the break. The only thing I didn't like about it is that I executed that trade pre-market. I want to start deviating away from the market open. I want to start focusing on after 6:30, after 7 o'clock, and what happens in that area, because the market open continues to be, the market open is so choppy that You never know what's going to happen within the first 30 minutes. And that's the scary part because as you can see, look, market open, boom, and it just tanks. Okay, but then if you compare OPGN to yesterday's BDR, BDR just went flying. But BDR was also a morning spike reversal pattern, not a pre-market high breakout pattern. But I've also, according to my data, I also have a better chance at profitability with plus 13 with a pre-market breakout than a morning spike reversal. The only thing is that you're at a bigger risk when you're buying the pre-market breakout compared to buying the reversal, because the reversal already dropped and now it's coming back. But yeah, I think the takeaway from OPGN is that I really want to just stay away from pre-market. It's something that I definitely need to work on. Definitely something I need to work on as far as just having patience, disciplining myself to patience, discipline and patience, discipline and patience, discipline and patience. As I said yesterday, I missed out on 26% profit because I just didn't have the patience for the squeeze to run. And I had just wound up cutting my wins very short. I was +6, +1, and +4. And if I would have executed that correctly, then I would still be on trend. Because I've noticed that as far as cutting losses, I'm getting very good at executing the -6. It's just the patience to stay in for the +13. So my takeaway for OPGN is I no longer want to buy pre-market breakouts unless it's at the market open into the actual regular hours of the market. Because especially this, I mean, this is at 6:20. I'm buying this, which is almost at the market open, which, you know, it's realistically, yeah, dude, that's, I'm not happy. And patience, man, patience and discipline, patience and discipline. So overall, I actually like the breakout. I like the candle that broke, very strong candle here. But as I started noticing and it broke underneath this support level, that's when I said, yeah, that's not looking like something I want to be a part of anymore. And so I cut my loss at -4.6%. Okay. Now this is something else I really need to work on. And that is just staying focused on one particular ticker symbol. But like today, I had 3 of them on my watch. So as you can see, we'll go to trade. This is where I actually execute my trades. I actually had 2 on my watch, and then WWR popped up on my top 10% gainers or my percent change gainers. I don't remember exactly which one came up first, but I remember seeing WWR, and WWR met all my criteria, and so that was my 3rd trade. So let's get into my 2nd trade. So yeah, takeaway of OPGN. It was a beautiful trend. Did meet all my criteria as far as market cap, as far as float, volume being traded. It was already trading over the float. Had a strong candle at the break. It just pre-market. I think the only thing that I don't like in this whole trade was that I bought it pre-market and I sold it pre-market, and that was already minus a trade right there. As far as entry, from what I see on the chart pattern, I like. As far as timing, I don't like that. I have to get better at allowing a stock to play out in the market open and allowing it to play out to see if it's even worth it. Because if it is a runner, there's plenty of profit on the backside of the move. There's plenty of profit. So I don't have to rush into these things. And I don't think it's a matter of me wanting to rush into them. I think it's just a matter of me watching these things live and going up and down. And as I said, this is such a strong candle and the break of the high that in my mind, just a trigger went off for like, that's a buy. And so I, I automatically jump in and buy it. Usually in the long run, my instincts are right. So I've been collecting data from since 2017. Well, actually, I mean since 2016, but actual useful data I could use to my actual trading. So between 2017 and 2018, before I even had a plan, okay, mind you, before I even had a plan, my instincts, just from me seeing things and hitting the buy from what I see on the chart pattern, I win 50% of the time, and that's over a period of between 2017 and 2019 of actual collected trades that I made between those time periods. And that was no structure to that. That was no specific plan. That was just me going into the market, seeing things I didn't even have. Like I said back then, I would set money targets. So it'd be, I want to make 100, lose $50. But as I said back then, I would trade with either, $2,000, $1,000 position size, 3,000. Like I never had a set specific plan like I do now. So I took that data and understood that just based off instincts alone from watching these chart patterns that I win roughly 50% of the time. So it's just a matter of critiquing that into a fit plan and strategy that will work in the long term. So sometimes hey, it's very instinctual to see something like this and wanting to buy it because it meets all my criteria. Every aspect of this trade, from chart pattern to volume to market cap to flow, it was the top percent gainer in pre-market. It had news come out, coronavirus related. That should have been a red flag too, because lately the coronavirus stocks have not been running like they did a couple months ago. So it's kind of a late end of the trend. And I bet you this is just either some big boy buyers pre-market and then selling off to the retail investors at the market open because they really don't know no better. And obviously I noticed that was coming in because usually when you start seeing a loop, which is what I started to see, it usually tanks, and that's exactly what happened, which is why I exited before the market opened because I already had that feeling it was going to drop. I felt like weakness was coming, so I cut at negative minus 4.6%. So yeah, man, everything about Opgn met my criteria. The only thing I didn't like about the trade was that I executed it pre-market. Let's try to deviate from that. Let's wait for market open, and if it breaks it at the market open, then it's going to bring some strength. Okay, so now let's go into trade 2. No, that was not trade 2. Oh yeah. Xelb. Okay, I believe this was one of the top percent gainers that met the criteria pre-market. As you can see, we see a spike. This is after hours from yesterday. See a spike after hours, pull back, spike again, holds, starts dropping, and then spikes again here. So originally, I wanted to get in at this pre-market break. So Xelb, I deviated from the plan. So let me explain why. As you can see, the market open, and this is a straight squeeze. As I've stated before, green candles that open and close near the very top is a very strong candle. But this was on my watch list because LB, this also met my criteria. And as you can see, this has the potential to run. As you can see, runs. Okay, this one was from like low dollars to from like less than $1 from the 90 cent area to the 180s. So that's a 100% move. This one was in the 95s to the 150s, so 60% move. So, you know, and the market cap was 15 million, 15.15 million, beautiful. Float is 6.98 million, also beautiful. And so, you know, lately, as we've seen in NTN and BDR, those small caps, I don't know, you might call it micro cap or nano cap, but the ones that are under 10 million and the floats under 10 million, those typically run. Okay, so let's go over here. So as I said, it was like almost 7 million market cap, 100, 200, 400, 500, 800, nearly 9, about 1.4. So pre-market, it was already trading about 1.4 million. All right, so 1.4 million obviously isn't close to 7 million, which is the float. But as the market opens, it starts picking up. So even typical, okay? So when I see this squeeze, it just completely deviated me from my plan, because now I was looking at this as a reversal. So this is a 1 minute chart. This is 2 minutes. So this is 1 minute and this one's 2 minutes. So for it to be at $1 and squeeze to 20, that's a 20% move right there. So when I seen this first candle just pop, okay, and then I see this strength and it's just popping. As you can see down here, I bought, I hit a market order, and it executed me at nearly 119. So damn near almost the mid top of this range, okay? So about right here, executed me, squeezed up. You know, at that point I was up maybe 6-7%. And then even when it dropped down here, I was still in it, because as I stated from yesterday, I wanted to make sure I stuck to my -6 plus 13 process. This now in my mind became a morning spike reversal, but because of the actual squeeze, I was anticipating it to top here, because as you can see, very similar to here, spike, pulls back, and then squeezes, and then it breaks it. So I wasn't even anticipating the break. I just wanted it to come close to topping that, because I knew topping that would give me about a, you know, roughly 17-cent gain. So, you know, you do the math, boom, 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 times that by 735. So I mean, that's close to a 13% gain, somewhere around that range. That'd have been a 12.5% gain if it hit the top, which I knew, like in my head, I was just trying to calculate it. I didn't calculate it on the calculator at the time, but I just knew it was somewhere around 13%. So I was really anticipating. Again, I bought a market order. So it just executed me a little bit higher in the squeeze, but if I didn't hit the market order, it wouldn't have executed me at all. So then through this pullback, and then when it breaks here, that right there just gave me all the confidence in the world that yes, it is going to come back and retest this 136 area. But as you can see, then it just tanked. And 36. So in this candle, as it's chopping around, so when this one came in and then I seen this one, I was still holding, because like I said, even at that moment, I'm still above the -6, and I want to stick to the -6 plus 13. But then this huge candle comes in and drops. Once I see it hit below the 6, I instantly hit it. So this one I winded up getting out at minus 7.3%, which, because I trade such volatile things, it is going to happen. I mean, overall, my goal is to maintain around the average of -6. And same thing with my gains. I want to maintain my gains on average somewhere around plus 13. Okay, so I mean, we're not talking exact, we're talking the numbers to keep it in the long term, where it's okay that if it drops below because it moves so fast, because obviously in 1 minute this went from 115 down to 107. So these things move fast, okay? So realistically, I play these long enough to know that I'm not always going to be able to cut at -7 because they move so fast. That's why typically you have been seeing me in the last 3 days cut my profits or cut my losses at -4, -5, because I'm starting to see the trend turn. And even here, I thought about it, but I wanted to keep maintain because, as you can see, it was super choppy. So I was figuring this thing can still pop if it really wanted to, if it caught some momentum. But it didn't. But I did deviate from the original plan, which was to buy the breakout. This squeeze influenced me to buy it here because I was really expecting, when you see a major squeeze like this, and then from what you see pre-market, or this isn't pre-market, I'm sorry, but what you see in after hours, you see the squeeze pulls back and then a bigger squeeze, which is what I seen here. So I seen this squeeze in the morning pre-market, then it pulls back, and I was literally anticipating it to retest the 136 area because of the squeeze. So that one I winded up taking a -7.3% loss on, and as you can see, it's starting to reverse now. So this could have been a good reversal buying the break of here. As you can see, stop right there, basically double topped in this candle right here, and now it's starting to move. And like I said, that's exactly, it's 7:36 right now. It's after the first half hour of the market open. And that's, honestly, I believe that's exactly what I need to get better at if I want to execute my plan the way I would like, because even in my data, it shows that the majority of the moves, the big part of the moves, are later on in the day. Because the goal is, I want to catch a 100% runner, okay? So if I'm trying to catch a 100% runner in the very first market open, that's not realistic. It's not realistic to catch, 100% move in the first half hour. Yes, that did happen with BDR yesterday, but I mean, on average, that doesn't happen often. If it's going to be a 100% runner, it might run 50, 60, 70% in the open and then drop maybe 20% before it has the run for it to collect another 50 out of that drop. So, something I definitely have to think more about. But like I said, man, my body clock is just so used to getting up and watching the market, because I've been doing it for so long, that I'm truly excited about coming to the market, because I love this. I love this game. I love this opportunity. It's a business like no other. And I've watched enough patterns to know. So I deviated from the plan on Xelb, which would have saved me a -7.3%. But overall, when I see a squeeze like this, like I said, this could have easily squeezed back to the top, and I would have collected my 13%. So again, you just never know with these things. And now it just formed this. So, unfortunately, I'm out of day trades, but this would be a potential right now that I would watch. If it breaks this, it could run back up to these 20 area. That's something I would be watching right now. Okay? But again, Xelb. And you could see my executions between these trades. I purchased Xelb at 631. I purchased OBGN at 620. So literally 10 minutes later, 11 minutes later, I'm buying something else, okay? And I believe that's something I need to work on. I think unless it is something that fully just doing exactly what I want to do, that's what I need to stay focused on. Unfortunately, OPGN was the first stock on my watch, and when it did the drop, I knew it wasn't going to break pre-market high. And as you can see it over here. It's just flatlining now, which is what I have been seeing. August is typically a slower month in the stock market, so I need to take that under consideration as well. But you know, Xelb and OPGN both met my criteria as far as what I typically look for. So overall, OPGN, I stuck to the plan and I respected my risk. Xelb, I didn't stick to my plan of breaking the high, but these things move so much that sometimes it is. Sometimes I do set up trades. There's a reason why I like pre-market breakouts and morning spike reversals, because if it doesn't break the pre-market breakout and it has a drop, they tend to reverse. So even if it doesn't do the breakout, I could catch a reversal. Okay, that's why I like both those plays. Because if the first one doesn't pan out with the breakout, I could catch the reversal, or vice versa. Sometimes they'll have a spike like this, come down just like it's doing now, and I might be able to catch this reverse right here. But then if it keeps going later on in the day, then later it breaks the pre-market high, then I'm back in it again. So that is clarifying things a little bit more for me now that I'm actually thinking about it in this moment. That, yeah, man, just be patient. Just be patient. Let the market play out the first half hour. I mean, obviously, the data doesn't lie. You're most likely to lose in the first half hour of trading than you are to make money. And I think that has been one of my biggest downfalls since I've started, is that I'm so excited to come into this that as soon as I see chart patterns forming, my brain automatically clicks to, oh yeah, that looks good, or yep, this is meeting your criteria, instead of just allowing it to play out, because there's plenty of time in the day for me to collect profit. So that was a big eye opener for me today, because I literally told myself this morning to wait half hour after the market opens. But as I'm watching these things, I think that's something I need to do. Instead of watching these things, I'm going to come in pre-market, I'm going to set up everything pre-market, and then I'm going to shut off my computer and turn it back on after 6:30. Okay? You hear that, James? You, speaking to myself here, you feel me? Because that is where your strength is, towards the end. After, let it play out the first half hour, all right? I told myself I was going to let it play out the first half hour when I woke up this morning, and I obviously didn't. I didn't even wait till market open. 6:20 was my first one. Then at the market open, 6:31, I execute a second trade. Okay? And in those two trades, minus 7.3 and minus 4.6%. Okay? Two losses, which is great. This is another great thing about recording these, because not only can I see the actual chart pattern and why did I think that, why did I execute that trade, but then also my thought process of me executing the trade. Because like I said yesterday with BDR, it was such a squeeze. I see this beautiful squeeze, which it was a beautiful squeeze. I just so happened to catch it on the higher side of the move. Because if I'd have caught the squeeze down here in the 111s, I'd have made 15 cents on that play, and that would have been about 13, a 13-cent profit, or 12-cent profit, or I'm sorry, 12% profit. So, and then when it broke up here, then there we go. Then that would have been a 13% profit. So you get what I'm saying? Be a little more patient. I have plenty of go, because obviously this strategy, this plan was built for the long term. So I knew that I literally set it out for where I could literally have 8 losses in a row and I'll still be in the game. I've never even had 8 losses in a row through all my data. I believe the longest, or yeah, I believe back in 2017, that was the longest streak of losses I had in a row, was about 8 losses in a row. But I find it funny that typically, very similar to day one, I just executed 3 trades and took 3 straight losses, which happened here today. So again, I think my takeaway from Xelb is just to let the market play out, man. Just let the market play out for the first half hour. Don't even get up, set up everything pre-market, and shut this shit off, because this, even though this shows strength and it could very well run, you never know until it plays out. Okay? Same thing like Opgn. Just because this shows strength and it has the potential to run, you never know until it plays out, because if it played out and this dropped even down here and curled up later, 715 area, I would already been done because I executed all three trades by 6:30. Okay, so something definitely need to work on for me personally. That is something I definitely need to work on, is my patience. Okay, I've noticed I have been disciplining myself for cutting losses, so I'm very happy about that. Minus 7.3% is over the -6, but overall, for all my losses, I'm okay with minus 7%, because these things do move fast. Like I said, I just want to stay around that 6 range, okay? Because it went from -4 to -7 really fast. So I had to cut that because it dropped even more. If we want to go to the complete bottom, because I got out at 109, so that was in, let's see, this candle. It did have a bounce. It did have a bounce back up after that, but then boom, 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 tanked 105 to 96. So I mean, I literally could have had a huge loss right there. So very happy with the -7. -7 is okay with me. But again, take away from Xelb: quit rushing things, man. Quit fucking rushing things, okay? The reason why I was plus 11 yesterday and not plus 26 was because I rushed it. Same thing here today. I did not stick to what I said I was going to do, which is wait 30 minutes and watch how things play out. Because if I would have done that, I would have never traded Opgn. I would have never traded Xelb. I would have never traded neither one of these if I would have just waited a half hour. Here's where we'd be. Market opens at 6:30, so at 7 o'clock, where would we be at? About right here. So I would already watched this tank, and I would have been like, okay, yeah, I'm done with that. Same thing here, 7 o'clock, right in this range. It already dropped. Okay, cool. I'd have nothing to do that. I wanted to buy pre-market breakout on both of those. They would have became potential morning spike reversals, but I would have never bought either one if I would have just waited a half hour. So, new start time for you. You feel me? Wake up, do your pre-market watch list, pre-market scans, set them all up, wait, shut off the computer, shut it off. Wait a half hour. When it's 7 o'clock, get back on. Got it? Good. So let's go to the third trade. Third trade was WWR. Now, as you can see, exactly like what we've seen in Xelb at the market open, squeeze. Okay. Now this one just so happened to be a powerful squeeze. And this one is the trade that I'm most happy about. This one I executed at 6:40, so about 10 minutes into the market. Let's go here. Yep, 6:41. Yep, 6:41 in this candle. Now, because it was so strong, okay, similar to BDR, when you see it in a strong squeeze like this, as you can see, strong, then it pulled back. And like I said, with the red candles, it's the exact opposite. So the red candles start from the top and close at the bottom. So when you see a drop in a red candle and it's still the red candle closes, when you see that much volatility in between and then it squeezes, that is so beautiful. Okay, that's beautiful. And this is it did exactly what I was anticipating, for it to come and tap this next resistance level, which is a previous resistance level from the daily right here when it topped right here. And as you can see, it also, again, a recent runner. Now this one started gapped up super high, gapped up to the 750s, but ran to the 920s before it dropped. This one just gapped up completely high and faded. And this one wasn't really a gap up. It just started from the bottom. So, you know, I anticipated it to just run. I wish I would have been able to catch it here, but I didn't spot it until later. So let's also look at that criteria. So like Xelb, met all my criteria, okay? It wasn't rotating the float, but it still was trading, you know, 3 million shares when I purchased it, and it's a 7 million float. So it was trading almost half the float. So let's go to WWR. It's sticking to the process, man. It's sticking to the plan. So WWR, again, another market cap under 20 million, 15.88 million, and another float under 10 million, 7.56 million. Okay, so those are the numbers I'm looking for. That meets my criteria. That is my plan, okay? Those are the things that are part of my plan. Okay? And in here, I think, you know, I see this beautiful trend. One red candle in between and bust. Again, one red candle in between and bust. So when it broke this red candle, I have been telling myself to let it break and then wait for the pullback to get back in. Which, if I would have done that, like I had told myself to do, I would have caught this move, and that would have been a 13% move. Would I would have caught it because it moved so fast? That is unknown. I might have hit the button. I might not have. To be honest, I honestly don't know, because it moved so fast. And that right there, that a 311 mark is the top of 13%, I believe. Let's see. I was in at 275. Let's do the math here. I mean, this trading numbers is basic calculation, man. So you feel me? Divide that by 275. Boom, boom. So 363 shares. 11 minus 275. 36. 363. Yep. 13% move, exactly. So I could have executed that. It's a potential. But anyway, that's where I purchased it at 275. But I bought it in this break, and then again at 247. So in this candle is when I exited, because as you can see, it dipped below my -6, so I wound up taking -6.4% loss on that one, and then just to watch it rip without me, which if I would have stuck to what I had told myself based off of what I'm seeing, which this is great lessons, okay? So don't get me wrong. There's nothing wrong with taking losses. It's all part of the game. When you're a stock trader, you're gonna lose and you're gonna win. Every stock trader loses, okay? The key to your losses is to stick with your plan of what you know. You want to stay consistent with the number you're comfortable with, okay? So overall, my consistency for today, I averaged 6.1% loss, okay, for each 3 trade. I was minus 4.6, minus 7.3, and minus 6.4, which ultimately comes out to minus 6.1% per each loss. So that is extremely important. Okay, a lot of people believe, and I also believe too, that managing your loss is way more important than your actual potential profit, because the comfort level you have to get with managing losses is where I'm getting to now. So years and years, I would take big losses. I would take 20% losses, 15% losses, 30% losses, sometimes even worse, because my risk management was horrible. I would more focus on profits than losses. So my mindset has changed since then, where I'm more focused on my losses than focusing on my profits, which I'm starting to get a good grasp, where it's now becoming second nature just to cut it, which is great. You learn more lessons from your losses than you do from your actual gains, which is the beautiful thing about recording this, because I can now review my losses. So again, WWR met all my criteria. Let's see how much it was trading. So let's see, 200, almost 300, and then this comes in 12 million. I want to break it down even more. Let's see, and let's do this one. So I mean, it was trading more than the float as well. Let's see, what was the float again? 7.56. So roughly around the float. It was trading roughly very close to the float, probably about 6 million, somewhere around there. 2.8, 2.45, 5 point, somewhere around 5 million, 6 million shares it was trading when it broke. So again, that's very close. And as you can see, this stock even died out. So again, if I would have waited till after 7 o'clock, I would have seen that this play is also no good. So, and what I mean by that is that the moves that I'm looking for, the moves that I'm looking to capture, or are, ones that start here and end here. This is what I want to see in the day from 6:30 to 1. I would like to see this. So if that's typically what I'm looking for, from start to close, then why am I focusing so much on the first half hour of the market open? I believe all 4 days, day 1, day 2, day 3, and now including today is day 4, that all my trades were executed within the first half hour of the market open. That is very eye-opening for me. A lesson learned from reviewing my data, a lesson learned from reviewing these videos over and over is, definitely set it up pre-market, close your fucking laptop until 7 o'clock. Remember, okay? Set it up pre-market, then close your fucking laptop until 7 o'clock, then reopen it to see what's going on. Let the market play out. Like I said, man, I love this game so much that I just love getting in. So overall today, Opgn met all my criteria for what I like to trade. So that was great. Volume was great. Market cap was great. Float was great. Float rotation, it had rotated once. I just happened to purchase it pre-market, and then it died out at the market open, which is what typically we've been seeing like in the last month. But I waited for the break. I bought the break, cut my loss. So overall, there was a lot of good things about Opgn. Just the only bad thing I didn't like was I bought it pre-market. And then Xelb again. I didn't even stick to my plan for this particular one, but this squeezed influenced me to buy it because of how strong the squeeze was for BDR yesterday. and also because of the actual chart and what you see right here, squeeze, pull back, squeeze even higher. See it right here, squeeze, pull back, but did not squeeze higher and failed. So, but again, XELB met all my criteria as far as market cap, met my criteria as far as float. It was close to rotating float. Well, not close. It was about halfway. Yeah, because I believe it was a 7 million float and it's trading about 3 million shares when I purchased it. So about halfway through the float. I'll know in the data because I'm going to record all this data. I got to put all the data down. But I deviated from the plan, didn't buy the break. I tried to dip by the squeeze, but it happened to just execute me somewhere up here instead of down here. If I would have been executed down here, but I missed that part, and I tried to rush into it to try to capture that move to the 136 area. Didn't do that. Wound up taking my biggest loss so far, and this one just died out. But like I said, XELB met my criteria. Market cap met my criteria for float. The squeeze is what I really liked, and it had the potential because you could see it here. Okay, so you see it pop, boom, boom. So it had the potential. Pop, pulls back, had the potential to actually do so. I need to get in more of a habit of which I'm going to try to deviate from these actual. I really want to get away from the first half hour and focus on the later moves. If I'd have done so, I would have never took this loss. Same with Opgn. So that's something to focus on. Like I said, set it up pre-market, close the fucking laptop, wait half hour, open the laptop back up at 7 o'clock. Don't even watch it. Don't even watch it. Alright? Okay? And then WWR, again, met my criteria market cap, met my criteria in float, trading very close to the float, about 5.6 million as on a 7 million float. But this was beautiful. I mean, you see this is beautiful, okay? And it did do what I wanted to. It just pulled back before it reached this. It didn't actually top this, but at 311 from my entry point, that is a 13% gain. So this trade was overall the one I was happy with the most because this is a beautiful steady climb. This didn't even pop up on my pre-market watch list, so I didn't see it till later because it popped up on the top gainers list. And this was a beautiful climb. This was a strong candle. As you can see, the volume got higher here as this candle made. So that was a good sign to buy it. And did it do plus 13? It absolutely did. So that overall, I should have listened to my instincts, as I've said before. Wait for the first break. Wait for it to pull back. And when it starts reversing back to the breakout area, that's when to purchase it. So if I would have stuck to that, I might have got in just a little pre-early in this candle. I might have got in at this candle and made that move. But if I would have got in a little higher, yeah, because I got in at, when did I get in? A 275. Yeah, so I did get in a good execution in this one. 275 before it broke. So yeah, even if I would have waited, I might not have got a great entry, and that would have been like 11 or 12%. But this is a pretty strong candle. This one's a pretty strong candle. I might have got in there. But yeah, so from my entry point at 275, it did reach 13%. Overall, that was probably my best trade of the day, but I took a minus 6.4%. And the takeaway that everybody needs to see here, including myself or whoever the fuck watches this, but me personally, is that I'm doing really well at managing my losses overall. And that is one of the most important things. It's just a matter of now getting better at, from yesterday, BDR, of actually letting my winners play out. yeah, letting my winners play out. I'm really good at cutting my losses so far. I focus more on cutting that loss than I do focus on collecting the plus 13. So um, give yourself time, okay? Patience. Patience is the most important thing I'm noticing here, is that I'm just rushing into the market because I love this stuff, man. And like I said, it's been a while since I traded. These are the habits you need to know. And to be honest, I had a thought process of revenge trading, even though I'm done with my 3-day trades. When I started seeing this thing run, I was, and it's all the way down to 218 now. But I was literally tempted to rebuy this thing, hoping it would run. But holding and hoping is not a fucking strategy. I've lost a lot of money doing that shit in the past. So when that thought came to do that, instantly I said, nah, you can't do that. Stick to the plan, respect your risk. I stuck to my plan today. Obviously, I respected my risk. Minus 4.6, minus 6.4, and minus 7.3. Overall, averaging around minus 6.1 per trade, which is right in my area of part of my plan. I just now need to get back into the groove of focusing on the minus 6 plus 13, which that I'm very happy with that I did today. That's exactly what I did today. Just all 3 of the stocks that were on the top percent gainers just so happened to crap out. And it happens sometimes. So, but the lesson I take away from today is that if I would have just waited till 7 o'clock, okay, this is 7 o'clock, I would have never executed a trade on any one of those 3 because they completely failed. Okay, again, if I would have waited till 7 o'clock, I would have never entered a trade on any one of those 3 positions because they all failed. Okay, so takeaway from today, next time you're trading, set it up pre-market, go through your pre-market scanner, okay? Set up everything that meets your criteria, and if it winds up being a runner, you're still gonna catch the majority of profit after 7 o'clock, okay? If it winds up being a winner and a huge runner, you will catch profit after 7 o'clock. And the odds shift to your favor because the longer the market is, the less choppier it'll get because you'll start to see the trend to form. Okay? All right. So that is it for today. Again, happy with cutting my losses. That I'm very pleased with. I'm maintaining the negative 6. Just need to get better at executing and just stay away from the first half hour, man. Just stay away from the first half hour. Quit trying to force stuff. That's what I've noticed I've been doing. I've been just getting up, and because I'm so excited to be back in the mix of trading, that I'm just forcing it. So right now, day 4, I think total I was about minus 18% on the day. So in 4 days, that leaves me at negative 13% total overall for my position size. So that's equivalent to 2 losses. So like I said, man, and for people that don't understand trading, I want you to understand that this is a long-term process. So for me to be down total on my position size, which is negative 13% on $1,000 position size, if we're talking negative 13% on my net, which is $4,000, then negative 13% is like actually me down 5% on my entire account. So that is beautiful. You have to understand this when you're trading. You have to understand the bigger picture. So for me to be down negative 13% on $1,000 position size, for me that's like just 2 losses out of I've already executed now 12 trades. So that's again about averaging minus 1% per trade. So when you think of it like that, that is telling me that I continue to be in the right direction, because from in the early days, 2017, 2018, after 12 trades. It was either I'm up or I'm way down. You know what I'm saying? So you feel me? A big adjustment in understanding how to manage loss and manage risk. So again, everything met my criteria today. Opgn met my criteria. WWR met my criteria. Xelb met my criteria. Everything met my criteria. Xelb deviated a little bit, but I looked at it as a reversal now because it was squeezing. This one I didn't see till later, because if I would have been able to catch this earlier, I would have been able to buy this break here if I would have noticed it here. But I was in the trade, trading Xelb, and if I would have been able to catch it there, I would have made a beautiful profit. Again, stick to your plan, respect your risk. -6 plus 13. Overall, all three of the tickers that I traded today met my criteria. They just didn't play out the way I wanted them to, and I exited in the right process that I should have exited in. So overall, it's funny because yesterday was a green day, but I wasn't happy with my performance. Today is all red days, all red trades, but I'm more happy with my performance today than I was yesterday, minus the fact that I traded way too early and executed all three of my trades before 6:50. So I executed all three of my trades within the first 20 minutes of the market open. That's the one takeaway I do not like. Be patient, have patience, and everything will fall into place, man. So that's the takeaway of today. Set up your scanners, pre-market, set everything, shut the fucking laptop, wait till 7 o'clock, open the bitch back up and see what's happening, because you're most likely, the odds now change into my favor once I let it play out. So, takeaway from today, cut all my losses the way I should, part of the process. Again, that puts me down now, negative 13% on a $1,000 position size. So out of 12 trades, that's averaging -1% per trade, which I'm extremely okay with, because cutting my losses, I'm doing beautifully. Now it's executing on my +13 when the opportunity presents itself, and like I did in BDR yesterday, didn't execute it properly. Today I was focused on that, so which is why I gave this one time to play out. I gave them all time to play out because that's what I was focused on. If I'm not hitting -6, it needs to be +13. Fuck everything else in between. You know what I'm saying? If it keeps running, just buy back in if you have a trade. All right? So -6 +13. Because if I would have stuck to that yesterday, I would have been +26, and that would have put me at +20% on my account. And then I just lost 18, so I'd be at +2% overall instead of -13% if I would have stuck to the -6 +13 yesterday. Today I stuck to the -6 +13. Just continue to focus on that. All right? All right. Till next time. This is it.